Syfe. We have Jill Berry, CEO and co-founder of Adatree, and a long list of fabulous women that I've been lucky enough to cover and interview over the years. Simone Joyce, the CEO and founder of Paypa Plane and former FinTech Australia Madam Chair. Have a chair, former Madam Chair. And of course, Tim Aman, the global FinTech leader from BDO Australia. There's a round table out there if you're mad keen on local legends to global game changers, dreaming with the UK and Australian fintechs, if you want to get along to that. Or of course, blockchain, unbound, real world applications. But this is the best panel, so go wild, give them a big hand. Over to you, Tim.
Thank you very much, Simon. Very excited to be here. Hopefully we'll have a good conversation for the next 30 minutes. I've been coming down to Intersekt for the last 7 years, and every year it's getting better and better. Hard to believe the ecosystem's been sort of in operation for the last 10 years, and Rehan was extremely excited yesterday. And so it's been great to watch the development of the fintechs and the overall ecosystem. And one thing that really I'm an auditor by background, so you might say auditors are pretty boring, but what's really exciting is the passion of the ecosystem and the partners that work with it. So over the last day and a half, we've been hearing a lot of different words, which we'll talk about a little bit. We've been talking about access to capital, we've been talking about digital and AI, obviously, regulatory efficiency, CDR reset, payments, very, very topical. And probably even if you look around for people that have been coming here, you've seen there's the type of people that are even coming to Intersekt have changed. When I first came, it was hoodies and shorts. Now there's a lot more jackets. You can see there's a level of sophistication. Still some T-shirts around, so I wish I could wear a T-shirt, but I was told I wasn't allowed to today. And then I think Rehan was sort of saying, what is the next 10 years? I think Simon actually talked about it as well. So I think it's a matter of what's going to happen to the ecosystem over the next 10 years. And what this panel is really going to be talking a little bit about is, the topic of buy, sell, or build. We've got a very good panel. We're going to be talking about some of the strategic decisions that these three ladies have thought through in terms of their own individual journeys, but maybe a bit of advice for the fintech ecosystem. The ecosystem is expected to grow by another 10% over the next 8 years, but we also have a dwindling number of fintechs. So, some of the decisions around, strategic acquisitions, buying, or scaling up is going to be quite interesting to see. There's great growth opportunities for the ecosystem, but it's going to be a matter of how they look to grow. So let me introduce the panel. I'll have Sam, if you want to talk about yourself for a second.
Sure. So maybe just a quick introduction of Syfe. So we are a digital investment platform. We started in Singapore 6 years ago, essentially with the aim of helping retail customers grow their wealth for the long term. And in that premise, we basically have built a holistic solution for retail customers across cash and savings, managed solutions, and brokerage. And relevant for this panel and this discussion today, and also my presence here, is that we acquired SelfWealth, one of the largest retail brokerages in Australia, just about 4.5 months ago. So very relevant discussions and thinking process, entering a new market. In Hong Kong, we've done that organically. In Australia, we've decided to do that, obviously, inorganically.
Jill?
I'm Jill Berry, CEO and co-founder of Adatree, a CDR intermediary in Australia. We've also been acquired 18 months ago by Fat Zebra, who's a leading payments provider here as well. So relevant to this panel is that so I've been on the side of being acquired, but also since being part of the Fat Zebra group, they've also made 2 other further acquisitions and payments. So we've have been bought, they've been buying, but also integration. And One Fat Zebra is the game right now, and all the challenges and opportunities to go with that.
Simone?
Hello everyone, Simone Joyce, the CEO and co-founder of Paypa Plane. Paypa Plane runs smart payment agreements, which essentially tokenize consent and agreement structure for a payment agreement and sends that as a token with any transaction across any payment rail. We predominantly work with financial institutions, and I was just pondering about whether we are the buy, sell or build, and I think we're the silent fourth option, which is potentially partner for scale, but we can get into that in a little bit.
Yeah, it was a pretty good combination of the panel. Like, we'll talk a little bit about the individual stories, but I think everyone on the panel has a slightly different view. So maybe we'll start off, Sam, a little bit. You mentioned kind of the acquisition, and so obviously you're probably the buy person here, but maybe just talk a little bit about the journey to sort of venture down to Australia and what sort of attracted you to come here.
Sure. So I think, a lot of things. But if I were to summarize, perhaps a few of the most important points, right? I think we've always been very, focused on developed markets, where we feel that from a wealth perspective, they make the most sense in terms of actually monetizing and building a sustainable business. And so the kind of natural progression, I think, in Asia Pacific for us was, Singapore, Hong Kong, and then Australia, right? And if you look at Australia as a market, it's a super attractive one, from many aspects, but primarily also from a demographic aspect. So, we target mass affluent customers, and if you look at that segment, basically in Australia, likewise with Singapore and Hong Kong, it's actually 1 out of 2 people of the population, right? So, probably more in this room, but generally, if you walk down the streets, 1 in 2 people would be our target market, right? So that makes, generally the market very attractive. And then it's also looking at gaps where we feel that, our proposition can solve, an area in the market which is not yet solved, right? And in our case was on the advice space and really creating that one place where people can go and manage their money, affordably, accessibly, and with the right advice and personalization, et cetera, right? But if I talk about, why we bought, essentially, and went down that path, I think one of the things that people often maybe disregard when we consider, the buying and or going organically is time, right? I think we could have had the choice to go, organically in Australia, but, we were very conscious that I think to build up the scale that we would want to get to would effectively take us, a significant amount of time in the market versus, the option to purchase, an asset where and a business that could really help, speed up that process, right? And as any startup or scale up would know, time is actually your biggest challenge in life, right? And so that's a big consideration, right? I think, secondly, it's about, making sure the right target is there. It's all very well saying your strategy is buying, but what do you buy, right? And so that's super important as well, right? So I think for us, the stars kind of aligned in some ways. We had always looked at SelfWealth as a business that was very aligned to what we were doing, where we felt that we could add on a lot to the company. And, essentially, the customer base is very focused on, long-term wealth building, which had a lot of synergies with what we were doing. And so I think that is also, super important, right? To think about, do you have the right target? Is it really filling what you want? What are you really buying it for, right? And making sure there's enough synergies there to give you the best chance of success in the market, right? I'll perhaps stop there. I could go on, but
yeah, we might come back to a few points you touched on there. But Jill, maybe I'll hand over to you. So you've been sort of kind of on a few sides of the transaction, I think. So maybe talk about your Adatree experience in terms of I'll call it Zebra, Fat Zebra, acquiring Adatree. But once you've been to Fat Zebra, what the plans in terms of further acquisitions, and I think maybe just touch on the right person who's acquiring, or are you buying? Because that'll link a little bit to some of the cultural things we might talk about.
Yeah, thanks, Tim. So the journey of being acquired, it took about 14 months from when I first got the email saying that Fat Zebra, or a client, is interested in buying an open banking company to it actually happening. As at the time, we weren't looking for a buyer, but it was actually happening where it happened organically. Previously, some other companies had been interested in buying us, and just sometimes it's like, oh, well, are they just looking under the hood? Or like when you sell, you have to work there, and you have to be, something that you like pour all your passion into. So it's like, well, do I want to even be a part of that team? So like, it's not just a number, it's not just your investor, it's not just a transaction, but it's like, well, if I'm spending so many of my waking hours here, like, do I want to be part of this? Well, and the answer was yes for FatSebra. So it took, a lot of time just not doing, the standard due diligence, BDO helping out with finance and everything for the transaction, but just learning about, well, what's the vision? If you're a payments company, it makes sense. Globally, it's happening everywhere where payments companies are buying open banking companies. But what's your vision for the data? How is this complementary? Does this relate to your existing customer portfolio? Is this more of a Horizon 2, Horizon 3 play? What's your vision for it as well? So I think that understanding and making sure that it's a right fit was actually really important. I think that, the team is happy there. The cultures all are really important, really aligned. So it's actually been a really positive experience being acquired. I've definitely talked to a lot of friends or other FinTech people that they actually don't have that experience. They're not having the best time being acquired, even though you might think, oh, an exit, wow, this sounds great. Well, it often isn't. It can be, but it isn't. So I think that going through that journey and really slowing it down and taking the time and be like, is this the right decision mutually, is actually really important, for Adatree and FatSebra.
Yeah, I think, again, talking about, I love working with the founders and people that have founded the fintechs, but one thing when they look to get acquired, it sounds good in concept, but they really struggle with kind of letting go. And also, who's actually going to be in charge of the new company and what are the responsibilities? So, it's always one of those things in terms of if you're building to be acquired, it's understanding that strategy, but even when you get to that point, it's hard to sometimes deal with. And maybe Simone, like I know you mentioned you're the fourth, in terms of that partner piece, but obviously you've been building. So maybe you can just talk a little bit about your journey, because maybe along when you first started, maybe you were building towards something different, or you've always been that building and partnering path.
I think that when you start a company, potentially where you end up going is not the path that you end up taking. And I think that's probably true from hearing what you said, Jill. Maybe for Syfe, there's a little bit more sticking to the end mission. For us, we really started out by seeing if this thing that we wanted to do would work. And the reason we had to build it is because no one else was doing what we were doing, for us to pick that up and use as part of what we were doing. That hasn't changed for us, but the way we talk about what we're doing has changed, and the way we address the market has changed. So our client on day one of the first ever smart payment agreement was a small business, New Strength it was called, and it's they exist today, they're a PT, and we still serve that business alongside what I now think about as our growth partners. What Jill was speaking about aligning not just, our tech works well together. It's been really valuable for us to really think about how we fit in with the broader mission of our partners and how we make sure that we keep the identity of our mission separate to that, so it doesn't homogenise too much. And that can be tricky in a market as concentrated as Australia. So I think that's something that we're still getting right, is making sure that we're clearly articulating what we're doing, and making sure that we continue to make decisions around where we're putting resources. For us, that's still build, and I think it will be for the foreseeable future. We don't have any plans necessarily to buy ourselves, and we don't have any plans yet to be bought. So we'll continue on building for some time.
Yeah, I didn't think anyone would volunteer that they're going to be sold, up on the panel. So I think I'd put you in that build category, but very strategic with your partnering. I think maybe just we touch a little bit about investor pressure. I think in terms of maybe what's the investor pressure that is driving, I guess, some of the decisions. Because again, if I take a flashback over the last few years, access to capital has been a bit more difficult. Investor questions are becoming more difficult in terms of what is that pathway, how you're becoming profitable. But maybe, Sam, if you talk a little bit about, did you feel investor pressure, from Singapore, to make a splash into Australia? And then I'll ask the two of you as well.
It's always a sensitive topic. When I was talking earlier about developed markets, I think if you always listen sometimes to investors, and luckily I don't think any are in this room, at least not ours, but we would have gone into a lot of developing markets that were much hotter in 2021 when capital was free and free-flowing as well. And so I think you always have to be true to what you believe and what you think is best, right? I mean, think that goes across anything in the business, whether it's buying or not buying or any decision you make. I don't think, from a particular perspective, at least, in our case, and there was never a pressure to buy. It was more pressure to grow, right? So that's why I talk a lot about, time, right? And there's a lot of value to time that I again, really think is undersold, right? And not sometimes focused on enough, right? So I think does it increase the probability of your success? And that's how we kind of thought about it, right? To grow and to diversify the business, right? And I think from a time perspective, from a probability of success perspective, it also increased that. And that was the drive, to essentially acquire, right? So that's really kind of how I see it. I think, if I'd add on to that, I would say that one of the strengths of going into a new market and, whether you go organically or you acquire, obviously is diversification as well, right? So I think there's some investor pressure or should I say, investor positivity towards, having a diversified business, right? Because if you have scale and you have diversification, that obviously makes you a much more powerful and sustainable business, right? If you're not so dependent on one market, one business line, which obviously, puts a lot of risk in the business, right? So if you can prove yourself in many markets, in many business lines, I think it really opens up, the possibilities for how big the business can eventually become, right?
Can I just ask, what does your cap table look like? Are you VC heavy? Are you traditional sort of funded in that way, or are you looking more strategic as your investors?
Yeah, sure. So we have traditionally been more VC-led, but I would say in recent times, we've actually gotten a lot more strategic and family office money. So that's been, a new pool of capital that I think is consistent across many businesses in the region, right? So that's been also very powerful for us because they can take a longer term and strategic and sometimes more patient view, right? Because they're not under their investor pressure.
Yeah, I think it's, I guess it's that patience piece because I think, and I guess what's interesting about your company coming into the Australian market is going to open up a different view, I guess, of the type of investors that are investing in you coming down to Australia. Jill, just in terms of your pressure, I think, did you feel at Adatree and then maybe at Fat Zebra, do you feel any pressure in terms of what the investors want you to do? And I think, again, with a lot of the clients that I've worked with, they sometimes are forced into a transaction that they really don't want to do. It's almost a transaction of a last resort because they probably missed a few opportunities to partner or sell at another point in time.
Yeah, I think that, let's say, well, with our investors, like a lot of them, like we only had one VC, which is Flying Fox, and the rest of them were more like high net worth individuals in FinTech. So they were enthusiastic about Adatree and open banking, but they were actually just investing in us, like Shane, my co-founder, and I. So I think that they had experience in FinTech and banking, and they knew the risks and the opportunities as well. But especially for like the biggest investor in our seed round, like Shane and I had talked about, even recently, just like, oh, I wonder what it would have been like if we would have chose, it was actually a term sheet from like a major corporate, and be like, well, we would have had them as a customer from very early on, but our freedom and like ability to like the developed product would be so different as well. Hindsight's, obviously 2020, but I think that we had the freedom from investors that they more looked at it as be like, well, this is an investment, and how can I help them along their journey, instead of pressure for a certain outcome as well. But I think that that's the nature of the type of investor that we had. FatSev is quite different now, where they have a major investor is private equity, but it's not just money, but they're incredibly helpful on the growth journey as well, especially towards One Fat Zebra and their market goals.
Yeah, I think there's definitely an increased sophistication in the conversations versus, again, a few years ago, probably not as sophisticated. There was two people in a back room deciding they're going to partner and combine, and probably there's been a few that haven't worked out so well. I guess, it sounds like things are going swimmingly well, but do you have, some examples, I guess, of some inflection points in terms of maybe some of your partners that maybe didn't work? You don't have to name them by names, but just sort of some people that you thought were going to work that it didn't really align with your vision or culturally aligned with what you were doing?
What an unscripted question. Thank you, Tim. I actually don't know the answer to that. No. I wouldn't say it was a moment of something that we thought was going to work and didn't work. I think the lessons we have taken, and if you want to look up who our shareholders are, it's on our website. You can go and check it out. I think making the choices we made, to Jill's point, what would have happened if we did something differently? Well, you can't A/B test that. The things that I've learned are, with a strategic shareholder, being heavily aligned and highly aligned and understanding where you're going is the key to success. Having a symbiotic relationship, so beneficial with a strategic. As soon as that starts to crack, it is incredibly difficult to manage and get back on track. When you add multiple strategics to your environment, it becomes even more difficult to manage. So the answer that we have come up with, and I'm really grateful and pleased to have the partners that we have, because it's shaped us into the company we are today. Good governance couldn't be more valuable for us, to really have that separation of, this is the product, this is the commercial nature of that, and this is how the board, who has representation across our shareholder group, manages that. And keeping those things really clear has helped us to maintain that symbiotic relationship with all of our partners. And for us, to Sam's point, thinking from a geographical expansion perspective, having solid strategics by our side here is actually exponentially helpful as we think about markets globally.
Yeah, and obviously I'm quite fascinated about fintechs that are looking to go global or within the region. We've had some success stories, some false starts, in terms of going particularly into Asia Pacific or trying to crack into the US market. But again, I think, Australia and New Zealand are a great ecosystem for fintechs to come in. But I think, Simone, you kind of mentioned there's an element of saturation at a certain point with the type of fintech, so it's going to be quite interesting to see some of that partnering or the continuation of buy, sell. How quickly the time goes. One thing I know, Simone and Jill, you're quite passionate about some of the regulatory environment. So there's been some recent changes, Simone. So what's your view in terms of the impact of some of the recent legislative changes?
I think that the quick progress that we've now seen, I say quick, after 2 years of no progress on the PSRA, the Payment Regulation Act, actually coming up for royal assent, I think in the next 2 months or so. I think we're going to see a lot more activity in the payments industry in Australia now as a result. Whether that is more consolidation, whether it's bringing together CDR more closely into payment, could be digital ID coming into payment as well. I think this is some exciting times. We haven't seen a lot of companies start up recently, but potentially these regulatory changes will see some more companies coming in, maybe from overseas markets. But I do think we might see a lot more activity potentially in that consolidation market to take on the opportunities.
And I know, Jill, when we first met, you were spruiking CDR. So if you talk a little bit about the CDR reset, what do you think is going to be happening with some of these regulatory changes?
Same with CDR. It's been pretty quiet for the past 2 years, even though there's been the legislation passed about action initiation. But I think that we're going to start to see some highways come together. so you can actually drive together. Honestly, I don't think action initiation for payments and data will be the first things together. Like energy switching seems really promising. It's also really applicable to all Australians. We've just finished an experiment about how can you use CDR for energy switching. It's pretty exciting, but how can you look at CDR and digital ID? So private companies can start to use digital ID in December 1st next year. Well, also looking at it from a consolidation, FinTech point of view. Well, if you have a strong governance and compliance structure in place, how can you use this as, is this a competitive advantage? So you can, if you think about consolidation, there's going to be a bunch of companies that want to leverage this but won't have the expertise or or resource in place to do it. How can you commercialize this? So then not just have product or platform, but also have like regulation and licensing, even sponsorship as a commercial opportunity as well. So I think that it'll be really challenging to bring it all together, but if you have the capabilities and you can nail it, it'll be an excellent commercial opportunity.
Yeah, I think if we get some regulatory efficiency, I think you'll start to see, one, hopefully some compliance costs go down, but two, an opportunity for other entrants to kind of come into the market. So what I like to see is a bit of a surge of the number of fintechs, starting up or coming into Australia. I know time is up, but Sam, anything bold you like to say? I know you've been living at the Hyatt. It's like a Hotel California for you. What do you think the next 12 months is gonna hold for you?
Oh, to be honest with you, I don't make predictions more than like 6 months out. I only see my life in whether it's for the company and whether I think too many things happen in the next day and week and month to really look too far out, right? So it's a tough one. I hope that at least personally, my integration goes well enough that I can go home a little bit and not live in this hotel as much as I currently do. But that's my hope. I'm not sure I have a bold prediction with what's going on in the world right now. To be honest with you, I could go either way.
So I'll finish with a bold prediction. Jill and I were part of the Bills Mafia, Buffalo Bills football. So hopefully we'll be in San Francisco in February. That's our bold prediction. Thank you very much, panel, for your contribution.